Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 1st, 2022, and welcome to the Tuesday live stream. Glad to have you. Hope you're having a great day, great evening, wherever you are, whatever you're doing. All right, coming to you live from Washington, D.C., and talking about Bitcoin as I love to do. And this live stream is going to be about how Bitcoin is set to break out again. And I'm talking about a big breakout, not anything small. We may once more expect a 20 to 25% move. If that interests you, then stay tuned, watch until the very end, all right? Not only am I going to show you why I think Bitcoin's breaking out, I'm going to show you how exactly I think it's going to break out. It may even do so while we're on stream, all right? That's the first thing. The second thing is I'm going to share some tips and tricks that I use on a daily basis as a pro trader that, you may not know of, okay? So let's get started. First, let me check who all is here. I'm sorry, I was a bit lazy in terms of getting the stream out. But no problem. Let's check nevertheless. Okay. Here we go. Hey, Colby. All right. Okay, so here's what I'm seeing. All right, and first let's rewind. I'm on the 5-minute time frame because I'm looking very, very carefully at what's going on. But let me show you exactly why, I think we're getting ready to break out. Okay, so 30-minute time frame. Actually, let's move this. Let's just erase this and we can just make it again, right? I don't want to confuse anybody and have too much of a messy chart. All right, so we had our breakout from yesterday, and that to me was simply a wave 1 going into a wave 2 going into a wave 3, okay? And wave 3, we all know, most impulsive. Hi, Niha. Niha? Please correct me if I mispronounce your name. We have the wave 3, which is the most impulsive, usually the longest of the Elliott waves, okay? So that's what we got yesterday. So as a matter of sort of, obviously after 3 you get 4, right? So I'm seeing this as being wave 4. I didn't know if it was wave 4 of the larger trend or wave 4 of just this wave. But I think that, not overthinking anything, if you look, it seems as if this whole thing right here has here, we'd have to zoom in. This entire move right here has both a simple and a complex correction, okay? We have your complex correction for wave 2 here, and then you have your simple, relatively simple, concerted wave 4 correction here. And I think this final wick up was wave 5, okay? I could be wrong, but that's how I'm counting it. So for me, we were hanging out here for quite some time, and I'm like, okay, it's not done yet. I know these. I've seen these before. These consolidations, sort of, they're super bullish. They're super bullish, kind of diagonal upwards consolidations that you typically get in wave 3. In wave 3 impulses, and they never end just like that. They usually precede another wave. I've been caught on the wrong side of them, so that I know. So I was like, this has to be wave 4 because I've seen it before. That's just my experience kicking in. And so for me, this was wave 5, And so I'm counting 1, 2, 3, 4, 5. Okay, and this wave 4 is, I don't know if it's even respecting the 236. It may not have. It may have. Yeah, it didn't. I don't think this wave 4 even hit our 236. It did and it didn't. Okay, if you stretch this out horizontally and you take this as one contiguous sort of correction, yes, there's a part of it that hits the 236 because it started correcting at the 236. Although it's not horizontal, it's more of a vertical thing. And that, I think, is what we're getting once more. This is why I said in the chat a bit ago, I'm expecting a running flat. A running flat is something that is exceedingly rare. It's not something you see all the time. It's in only very, very bullish assets. And it's essentially where the C wave doesn't correct to the same level as the original A wave, okay, as the origin point of the A wave, okay, and so it's basically running in that it's slanted in the direction of the trend. So that's what I'm seeing on Bitcoin, and so I've seen this once or twice before only, where you don't respect the 236 in a traditional sense, where the 236 sort of complex correction in the wave 4, it's always wave 4 that I see it in, doesn't hit the 236. So for me, it's both like reading and just, you know, pulling on my experience. That's why I see 5 waves here. That's why I count this initial break of structure as A, these 3 waves as B, and then this as my C wave, my running flat C wave. I have 5 waves, but these 5 waves come short. The trend, the correction is slanting in that direction, okay? So it's extremely bullish. And as a novice trader, I would have waited until I turned to stone for price to come back, because I was also pretty fundamental, right? In the sense, I was very rigid. I read in the book that the minimum retracement is 236, so I'm waiting for that 236 retracement of this larger wave 4 structure, but I don't think you're going to get it, okay? And the reason being is what I just said. This whole structure is wave 4 corrected, but it's running, it's slanted, right? This the origination of A is pretty much the lowest point you're going to get. Price just doesn't want to come down here. There's too much buying pressure, okay? And so when we take our Fibonacci retracement tool, go from the top to the bottom, you can see you even barely touched the 236, okay? And this, do you see that? And it doesn't mean the whole idea of 236 being a minimum retracement is something that you should throw to the, by the wayside. Absolutely not. 9 times out of 10, it'll make you a lot of money. It'll save you a lot of money. It'll guide you perfectly. It's just once in a while, and you have to know when. It's typically in full impulse. I've never seen it otherwise. In full impulse, in a very bullish asset, it so happens that you get running flat corrections, and that is never the 2 wave. It's always wave 4 comes short. And so just be careful for that. Watch out for that. So that's something I wanted to share with you all. All right. So that's why I'm seeing 5 waves here. This is why also now we have the larger kind of analysis. Now we zoom in to this entire structure, this purported wave 4, right? Again, I have A, initial break of structure, B, and then this is my impulse, 1, 2, 3, 4, 5. That's it. That's it. That's all she wrote. That is sufficient for a wave 4 correction, right? It's a corrective sequence, and it's comprised of 3 waves, okay? A, B, C. It's simple. Nothing complicated about this, okay? So when I saw that, I'm like, okay, we're getting close to the end. If not, we're at the end. Right when we hit that 5th wave, in this C wave, I'm then looking for reversal. Once again, and I talk about this all the time, a reversal wave is something like this. A, B, 3 waves in A, 3 waves in B, and then your C wave, okay? And 3 waves in B can look like this. It can look like this. It doesn't really have, one way of looking, but it's kind of like that. It's essentially 3 sequences. It's a sequence of 3 flat corrections, okay? Once in a while, you can get a zigzag in B as well, but more often than not, it's flat correction. All right, so that's what I'm looking for. So go on the smaller time frames. Let's go on 5-minute time frame. Coming here, we see that we do indeed have our A wave right here. Initial break of structure, right? So remember, 1, 2, 3, 4, 5. Oops, no, that's not it. 1, 2, 3, 4. This whole thing is 4. A complex correction, or it's not a complex correction, but it's relatively complex vis-a-vis wave 2. And then 5, okay? That's it. Let me just put that in more cleanly. Guys, don't forget to like the stream. If you just came, like the stream just so YouTube can put it out to others who are interested in sound technical analysis and not like wish lists. I watch a lot of other analyses, right? Just because I want to keep open-minded. I want to see what other people are thinking. And I don't know if it's just me, like people sound like it's not analysis, it's just wish lists. We want to see this. I want to see that. I really want to see Bitcoin. Like, it's like, I don't give a damn what you want to see. Like, tell me what your analysis is, not what you want. Like, what the hell? And then they'll be doing technical analysis and they'll be talking about fundamentals. And it's like, wait, is this technical analysis or fundamental analysis? I mean, fundamental analysis is fine if that's your thing, but don't say that it's technical analysis because they're not the same. Anyway, 5 waves down. Then I see my A wave right here. That's my initial break of structure, right? Then my B wave, right? 1, 2, 3. Do you see that? No. Sorry. It is 1, 2, 3. That's it. That's my B wave. This is my A wave. This is my B wave. That's my 1 flat, 2 flat. And then my 1, 2, 3. How do you count this? This is 1, 2, 3, 4 is like something like this. Let's see. I saw it so clearly a moment ago. What am I seeing? Okay. That's totally my B wave. Or is it? Now my eye's a bit disoriented as to what I'm seeing. What am I seeing here? Okay, got it. This is throwing me off because that count is not what I saw. Here it is. I definitely saw this as the 2 wave, 3 wave, 4, 5 right here. Okay, my A wave is over here. Right there. That's my A wave, and it's within the region of the wave 4, okay? This is my B wave, my flat correction. That's it. And then my impulsive wave starts here. This is why I think Bitcoin's going to break out any moment now, because I see one wave. It's basically an initial diagonal, so it's a 5-3-5-3-5 structure. 5, 3, 5, 3, 5. A, B, 1 second. Let me move something. Okay. So that's what I'm seeing, and that's why I'm seeing it. See, everything, and so I was tracking this down. I was tracking this movement because, as I said, I initially was waiting for price to go to at least the 236 of this entire move. So, like I said this morning, around 41.5, 41.6, something like that. And, or sorry, the 382 is around 41.5, 41.6. But anyway, I was looking for a move down. And as soon as this broke right here, I put a trend line here. And as soon as we broke right here and retested it, I knew it was game over. I knew it was complete. And that break and retest was essentially my A wave, right? And that's what an A wave is. It's an initial break of structure. I hope everybody sees that, and I hope everybody sees why. Like, we've already broken out. We're just basically consolidating in the first wave of the move out of the wave 4 correction. Wave 5 has already begun. This is wave 1 of wave 5. Okay, of whatever degree you want, probably small degree, but it's the first impulse in wave 5. Does that make sense? So if this is 1, 2, 3, 4, 5, an initial diagonal, right? Initial diagonal, or leading diagonal as they called it. This is your A wave. This is your B wave right here. I anticipate 3 waves up, forming a higher high, most likely. And it's probably going to be corroborated on decreasing volume. And then we're going to get an impulse down, then a breakout. Does everybody see that? Does that make sense? That's what I'm seeing. All right, I could be wrong because it's always tricky to say how something's going to happen. It's easier to say what's going to happen. Kind of like Bitcoin's going to break out very soon, right? And I think that's quite obvious, and most people can tell you that. But getting precise as to when it's going to break out or how it's going to break out, right? That's like another level of analysis, and that's what I'm trying to offer. Not to brag or anything, but I'll show you why it's important sometimes to make a path as to how something's going to happen. Let's see. For instance, I'm already in this trade. If I can confirm that this move up is volume divergent, meaning we go up here and the volume doesn't go up with it, then I can just take profit here and then wait and then get back in the trade down here. That's easy money, right? And that comes from knowing how. I do that all the time. So I'll get in a trade and I'll spy a B wave, right? A B wave after an initial trend, and I will catch the top of the B wave and re-enter on the bottom. So that's just like a kind of a thing I do all the time. It's like, easy money. It's the easiest money. It's very, very relatively low risk, right? Because I'm not trading against anything. I'm not like shorting it once I'm getting up here. I'm just spot shorting it, meaning I'm getting out and I'm buying back lower. But that comes as a result of really going into the small time frames and seeing how something is breaking out, right? I see my leading diagonal. I see my A wave. Or I think this is the A wave, right? Because we're looking for 3 waves at each instance, right? So this is, let's see. Yeah, that's right. This is A. B would be like this. So I'm looking for 3 waves in B. I'm looking to make a higher high there, and then to get an impulse down, and then my breakout. So that's what I'm looking for in Bitcoin, and that's why I think Bitcoin is going to break out at any moment now. Now that we have that, and obviously that doesn't necessarily need to happen exactly as I drew it up, but I think it's likely. And what should I do? Let me actually... Yeah, no, that's fine. The next thing is, let's think of what we can expect once it does break out, okay? Let's say that everything I said up until now is accurate, right? All of this is a wave 4 structure. This is your A wave, this is your B wave, this is your C wave. So it's all good, okay? We have 3 waves here. We didn't touch the 236, but we got close, but we understand that it's super bullish, so it's essentially correcting upwards, okay? We get that. We get it. It's bullish. Now, let's say we catch the move up. What's our next target, okay? This is a great point that I really want to make. As a trader, I've made so many stupid mistakes. I feel like I've made every fucking mistake, okay? And the beautiful thing about that, I've lost a lot of money, I've lost a little money, I've made money, I've like gotten out way too early, I've stayed in trades way too long, I've done it all, I feel, right? One of the things about impulses is that you don't want to mess with them. Okay, my trading strategy can be boiled down to 3 words. Scalp, scalp, swing. Scalp, scalp, swing. Meaning, I scalp small things. Like, let's say we're in a range, right? And the price is, let's say, a reversal pattern or something, right? You see reversal patterns everywhere. I'm going to long the bottoms and short the tops, right? I'm going to have fun with this. And then, once we get into our impulse and breakout, I'll swing. I'll scalp this, I'll scalp that, and I'll swing that. Do you see? It's like, it's important for me, and it took me a while to figure this out. Why? Because trading for a living, like, I can swing everything. Oh, swinging is the way to go. It's less work, and it's less sort of risk. It's not necessarily less risk. Sometimes I think scalping is a lot less risky because I'm more in control, and I'm managing it, and I can like get in quickly, get out quickly. Moves happen faster, right? But the issue with trying to swing everything or trying to scalp everything is that you don't want to overtrade swings. You don't want to stay in too long for your scalps, and you don't want to be impatient for your swings. That's what I'm trying to say. And the price doesn't often go into that mode of impulsive mode, right? 90 to 95% of the time, you're dealing with chop and chop and chop in ranges, okay? This is on the hourly chart, mind you, right? So this is like, here, let's get an idea for what I'm talking about. That chop is 2 days and 22 hours. That's 3 full freaking days, right? And then you moved ranges right here. You moved into another range, and that range was 3 days, okay? And then you went up, and that range was another 2 to 3 days. Do you see what I mean? Like, most of the time, you're in a range. You're trading pretty much sideways, and then once in a while, you'll get into this trend, right? When you're in a range, you want to be quick in and out, in and out, in and out. You want a low time frame. You want to be surgical, or as surgical as possible. You want, your stops, whatever, or you want to just watch what you're doing. You don't want to just buy or sell and leave, right? You can't. But then once you realize a swing opportunity, you get in and you don't fucking touch your trade. I'm speaking to myself when I'm saying this because I've fucked this up so often. I can't tell you how often that, maybe I've done this before. I've gone on 15 15 trade win streaks, okay? And I thought I was the best thing since sliced bread. And in those 15 trades, I made X amount of money. And I actually lost that amount of money in a stupid mistake, the 16th trade. Okay, I've done it all, I feel. When you get into this mode, you have to recognize when you're in a swing. And this, my friends, is a swing. Don't overtrade this. Don't try to scalp this. Just leave it. Leave it. I promise you, the little bit, the few hundred or few tens of dollars you think you're saving by, shorting this or going counter trend or taking profit early and then getting back in lower or higher, whatever, you're going to lose, because these impulses are heinous. They're crazy. They're too volatile. All right, let me give you an example. Yesterday we did, I think on 2 occasions, look at this candle. Look at this. Look at this. Like, look at that. Whoever was short there suffered. Whoever was short right there suffered. Or whoever thought they were going to get out and go and buy in lower, they lost, right? And that was a 5.6% move. You don't get those every day, right? That's like when you make your hay, but you don't have to figure that out. You can't, everything's possible. I'm not going to say you can't. There's probably some sick, crazy, like, genius trader that can tell you exactly when price is going to put in a rare running flat and when it's going to break out for these huge moves. They can tell you exactly when, okay? For those people, I'm not addressing them, all right? They're probably in the minority if they exist at all. For most of us, we have to go on higher time frames and just look. Go on higher time frames. Once you identify an impulse, what's an impulse? A 5-wave move, right? According to Elliott wave theory, especially on a higher time frame, set it and forget it, right? Take your time. That's when you take time off. Let it go up and down. Put your stops in, obviously. Always put some stops. But then, be less strict, because once you recognize a trend and a 5-wave impulse, you know that it's going to give you your 5 waves. Wait until it's done, then you take your profit. Don't try to get cheeky with it. Don't try to count intra-wave, because 9 times out of 10, you're going to get caught in thinking that a trend is up because you get fooled by a wave 4, but that wave 4 is not a wave 5, or you're going to think a wave 5 is a wave 4. You're going to do something stupid and you're going to mess it up. I've done it before. I've called these moves. I've called 10, 15, 20% moves, and I actually lost those trades, and people who watched my videos won the trades. I've done every idiotic thing you could possibly do. That's why I'm telling you guys, hopefully this helps somebody, whoever. If you guys are trading, if you see these impulses, they're really, really impulsive, right? They're really fast, especially the 3rd wave. And now we're going to get a 5th wave. And this 5th wave, I also anticipate, is going to give us 20%. And I'm going to show you exactly why I think that is. Just buy and leave it. Please. Make money. Like, I don't want people following me to continuously or constantly lose. Not because they don't know what's going to happen. That's just a part of good trading. The rest is risk management and knowing, when to not do anything and when to do something, right? This is a swing. In a swing, don't touch it. For us crypto traders, a swing is a few days. If it takes 3-4 days, let those 3-4 days elapse. So that's just what I'm seeing, okay? What's the target, okay? I think it's clear as day. You see this as a here. Yeah. It's a very concerted right shoulder, okay? Just because it's so bullish. But that's fine. Sometimes you have a slanted right shoulder. Sometimes the right shoulder goes like this, right? Signifying a super bullish asset. But I think it's just a head and shoulders, inverse head and shoulders. You could do this, but I think it's unnecessary, right? Because who's to say that this comes into play? I think this target is the more conservative target. That's a safer target. Here, you have a bigger target, and I just don't see it, okay? But I think this is definitely in play as a pattern. And I love patterns, and I use it, as you guys all know, in concert with my Elliott wave Fibonacci extensions, because they just give me good confluence. So I'm seeing my next target. And why did I give that whole rant about, and that's part of risk management, right? Knowing when to not overtrade. Because my next target is the final target, right? I'm not fucking around and trying to see, oh, when is it gonna stop at some, mid resistance or whatever, like, and pick up a few dollars here and there. No, no. Like, I'm putting this in right here. Now that I have my wave in, right? At first, I wasn't sure. I thought, okay, this looks like an impulse. I have a wave 1, a wave 2. I have some price action that doesn't retrace beyond the 618. Also, in context, it should be an impulse. So I think what's going to come next is a wave 3, right? All speculative. You got the wave 3. I took profit. I probably shouldn't have, but whatever. I took profit. Now I'm going to listen to my own advice. I got back in. I'm not touching the shit until we get to this target, which is this target is 53,552. Sorry, should probably be on log. 53,552. Okay, that's what I'm seeing. 53. Okay, and that's more or less where I've been saying the top is. I'm not touching it until we get there, okay? And that is confluent with this level right here. Do you see how we stop at these levels, right? So you have confluence here. That's confluent with this level. Also, more importantly and most importantly, it's confluent with the 618, which is what we've said would most likely be targeted in this two-wave retracement, okay? Do you see that? 618 is exactly at 52K. A small wick above is where I'm targeting the end of this move. So that's literally when I'm getting out. And like I said, once you hit this, I'm expecting, after a pivot, a strong rejection, because what comes after, as impulsive as Bitcoin can be to the upside, it can be to the downside. And if this is correct, and this is a 5-wave move down, impulsive to the 5-wave impulse to the way. If this is a 5-wave impulse to the downside, and this is a wave 2 correction, then what comes after this is going to be wave 3, typically the most impulsive, typically the fastest and the longest of the waves. Just de-risk. I'm going to repeat this a million times. You're going to get tired of it, but we are going to have people in this community that are going to be trapped long in here, in their spot trades, and they're going to be trapped long in their margin trades. I guarantee. Because people are going to get so excited. We just had a 20% pump. We're going to get another 25% pump. People are going to be so excited. They're going to be like, we're going to go up forever. Okay? So that's what I'm seeing. That's my large term analysis. Okay? And that's why I think we're going to break out any time now, in any moment. So let's see where we're at with Bitcoin. Go on to smaller time frames. Okay, looks like we're reversing. Okay, I see this as our wave A, all right, initial break of structure. And, it works both ways, right? Initial breaks of structure on an up move is to the downside, obviously. So we got 3 waves like this. Okay, let's make that another color. Where's my color? Right here. Okay, 3 waves, right? And I'm anticipating a B wave to come here. I'm going to take profit here and get out of the trade. And then I'm going to wait for it to come back here, get back in the trade. That's lunch money right there. That's like, it's not a ton of money with my account size, but it's free money. I'm not going to give it up, right? It's one of my favorite trades, right? It's quick, it's easy, it's fun, it's profitable, it's free money. Just take it, right? Your B wave you're doing this reversal. If you can anticipate a good reversal, and it's low risk, it's obviously low risk because you're not going against the trend, you're just getting out, right? And what's the worst thing that can happen? You miss the pump, but highly unlikely if you're counting properly. It's hard to miscount these 3 waves. You get 3 waves, you get typically a higher high, minimum to the 786. If it's a zigzag, to the 0.5, 618. And then you get here. Then you enter some, you start laddering in back here using risk management, making sure that this indeed is going to go back to the upside. If not, you set some stops wherever you think you should set stops. But yeah, that's what I'm going to do. And that's what I'm doing now. Let me answer some questions, and then I'm going to give you some trade secrets. Quite literally, there are 3 things I've mentioned before, but 3 things that I do to help with my edge in my reads and in just my understanding of the market. I'm going to tell you that. So just stay tuned. Hey, 410 Boxing Fanatic, Maryland, all day. Niha Neha, in how many days we will touch the top 50K level and estimate? I don't know. 3-4 days. Look, Neha, it's hard to say when, and as a trader, I don't really care. You know what I mean? Like, as a trader, I've waited all day. Sometimes I didn't sleep for a setup. I've in my career, I've waited to take profit. I've waited for so many things. It's hard to be a good trader and be impatient, right? So that's one thing. I think people that are used to trading or veteran traders, they're not that concerned with when as much. You know what I mean? And also, once you start saying when, it's like, what's that analysis like? I'm sure there are some people that can do it. There's always somebody that can do it. That's using the time-based fib analysis. I just don't do that. It's easier. Let me give you an example. Here's when I would say when. You got a triangle. You got price consolidating in a triangle. You've got support here. You've got resistance there. I can tell you when we would most likely break out because I can count the waves in the triangle in consolidation, and I can tell you about when if I'm positive or if I'm confident that we're going to break to the upside or to the downside. I can tell you around when we're going to break out because I can tell you around given the count and just given the pattern that this is likely to be the point of breakout. Then I can give you some time. And there are other exceptions where I could do some time sort of estimate, right? But when you're looking at these impulses, I mean, how long did this take? We called it yesterday. And right, this was yesterday. And that took 9 hours. Okay, let's count the B wave. No, let's just count the 5 waves up. 9 hours and 20 minutes. We went 17%. Okay, so just Neha, if I had to, gun to my head, I'd say we're getting something similar. All right, maybe not as impulsive as the wave 3, But if that took 9 hours, maybe this takes 14, 15, something. I don't know. I have no idea. But it doesn't matter, okay? I don't think it matters. Colby, what's up? Let's see. Okay, now let's share some tips and tricks and secrets. All right. So my first one, I think you guys all know this one. It's not really a secret. It's just using an indicator, okay? The one indicator I use is volume. At this point in my career, I'm not a big indicators guy. Used to use stochastic RSI. Used to use the EMAs, the 55, the 21, and the 144. Right? I used to use the Fibonacci numbers, those three specifically. And it's not bad. It's just I need something more consistent. Sometimes they work, sometimes they wouldn't work, and I couldn't wrap my head around when I could rely on them 100%. I want to rely on an indicator 100%. Like volume never ever it never betrays me. I can tell, like, I'm never confused by volume. Let me say that. Volume never confuses me. If the volume's high, I know that the move is supported. Okay? This move down was supported by volume. That to me confirms an impulse. That to me, Colby, in answer to your question, you said, how do you think that, why are you seeing this as you don't see this as a wave 5, yet yet you see this as you saw this as wave 5. Like, I don't even think about it so much, but my eye just kind of gets pulled down to the volume bars, and I see this supported by volume, and I'm like, oh yeah, that's wave C. That kind of supports my idea that this is A, this is B, and this is C. Okay, like, volume is underrated. Okay, the Wyckoff people will tell you how important volume is. Don't sleep on volume. Okay, it's cool. MACD and all that stuff is cool. If you know how to use volume well, it's like a cheat code. It's a cheat code. Another example, just look at what we're doing now. We're on the 15-minute time frame. It works on all kinds of time frames. You can go on a large time frame and a small time frame. Beautiful thing about volume is it's super simple. It's super simple and it's super accurate. Okay, right here, and like, if you look, if you use like RSI or stochastic RSI, like, trying to read divergences can get a little tricky. And there's some ambiguity, there's hidden, there's like, discrete, blah, blah, blah. Like, volume is just straight up. If the volume is going down and your price is going down, that means it's a consolidation. Every time volume is going down, it's a consolidation. That means the buyers and sellers are not behind that move. If the volume is going up, that means buyers and sellers are behind the move. That's it. You're an expert in volume. Yeah? So right here, we're going down, right? Let's say you don't know much about Elliott wave analysis, and you're like, oh no, I thought we were breaking out, we're going down. Look at the volume. That means we're consolidating. That means the down move is not supported by the market participants. Now, sometimes you do see this, and then we do break a support or something like that, or a resistance, and then you see the volume break up. But still, volume didn't lie to you, because before it broke support or before it broke resistance, it was indeed consolidating. So that's one of my cheat codes. It's like a open secret, but a lot of people, maybe they don't know, or they just, because it's simple, they think, oh, it can't be that effective, and they think that RSI or stochastic RSI, because it looks fancy, must be that much more accurate, must be that much more effective. Volume is underrated. That's my first secret or tip, trick. volume, right? Look at this move. And it's not that just because you have a big move, you're going to get volume bars the whole way. No. Just at the breakout, okay? And for us that do Elliott wave theory, volume typically lets you know wave 3 of any impulse, right? It could be wave 3 in the first wave, wave 3 of wave 5, right? It doesn't matter. Wave 3 typically gets a big volume bar, right? And you see that here. You see that here. Right? And then once you finish a trend, you get a capitulative volume bar, typically, okay? You get a volume bar that's big, but not as big as the wave 3 bar, typically, okay? So yeah, that's volume. That's number 1. Number 2. What is number 2? Let me think. Yeah. Number 2. Look laterally. This is what I call looking at somebody else's homework. And you know whose homework I look over? BNB. I used to look at Litecoin and Ethereum because they're also top 10 coins with a lot of market dominance, meaning they comprise a large percentage of the monies traded in cryptocurrency, right? But now what I do is I straight up just look at BNB. I'm going to tell you why. 1 second. Let me move my take profit here because I think my B wave's moving and grooving. Let's see. It's going to be the higher high. Say 44.86, something like that. I'm going to add a 4th. This is the 4th, and I'm going to say it now. Sorry, 1 second. Yeah, 44.86, something like that. It might go even higher, but that's fine with me. No. Let's see. 44.271. That's what I want. Okay. All right. Use the exchange that you're trading on to make your trades. I didn't figure this out until much later. You can see right here, I'm in the Phemex portal. If you want to use Phemex, it's one of the best trading platforms in my estimation for American people. Like, I'm American, right? I've used so many different things. I've used KuCoin margin trading. That's not good for advanced users. I've used Bybit. It's terrible for Americans. Obviously, you can't really use it without a VPN and a headache. And Phemex is just so well designed and so intuitive. And if you want to be precise, don't just look at your TradingView chart and assume that the prices are always going to be the same. The price here, the mark price here, isn't always going to be the same as the mark price here, right? This is 43,883. This is 43,852. Do you see the difference? There's always a discrepancy. And when sometimes you need, pinpoint accuracy at certain levels, you can't get it but by going into the actual exchange on the website and using their trading platform, right? So that you can put in your trades. I don't know. I didn't know that. I wish somebody had told me that before, but there's so many times I put in the trade and I'm like, ooh, it hit my target and it didn't freaking pay me. And then I lost the trade, or I lost a lot of money. I was completely correct. It's just that the pricing discrepancy was large in such a way that it hit my price target on TradingView, but it didn't hit it on the exchange. So use the exchange for the trading platform that you're using. You'll be more accurate. Yeah, and if you want to sign up for Phemex, you're not signed up already, use my link in the description. But if you don't, that's fine too. I don't care. The third thing, so that was the second thing, okay? First thing was volume. Second thing, use the exchange. The third thing I want to go back to the Phemex exchange, okay? Phemex is one of the most impressive. I'm impressed. I'm very, very impressed by people who trade on Phemex, and I'm going to tell you why. I've been trading for quite some time, and I've been always told that you want to go against a trend. The crowd is typically wrong, okay? And if they're long, you're probably, better. Smart money, you're dumb money. Retail is longing. You want a short. Retail shorting. You want a long. People who trade on Phemex are freaking monsters. They're beasts. They're savages. And you know why I know this? Is because they are seldom ever wrong. And if I'm against the trend, that tells me, this is the first thing that tells me that, okay, I need to review, I need to reassess my trading plan, I need to reassess my read, is when I'm being paid to do something. So for those of you who don't know, when you trade on any exchange, there's something called a funding fee. And that funding fee is basically so that the price of the commodity or the token on the exchange is regulated. It's not too high or too low. And how can it change? Well, if everybody's long, then the price is going to be a little different than the actual price, right? Because we're talking about futures and margin contracts, and if everybody thinks the price is going to go up, and it's going to screw with the actual price of the asset. So in order to balance that, they make it so that if everybody's going long, then everybody who's going long is going to pay for people going short. And so that would balance things, okay? I hope you guys understand. And vice versa. If everybody's going short on a move, then the price is going to be lower than the actual mark price outside of the exchange. So they're going to make everybody who's going short pay for anybody who's going long, okay? That's called the funding fee, all right? Don't forget to like the stream, especially if you're getting value. Hope this is helping you all. But yeah, like the stream so everybody else on YouTube or the YouTube algorithm, whatever, can see it. All right, so this funding fee, when we're long, for instance, now you'll see the funding fee is positive. That means most people trading on Phemex think that we're going up because they're long. One thing I've noticed about people who trade on Phemex is you don't want to contradict them unless you really know what you're doing. And every time I've lost a trade, I'm not exaggerating, every time I lost a trade on Phemex, I've been paid to do the trade. Meaning, I'm against the trend. So let's say I took a short right now, it would show in my account like $3, $4, $5 or what, depending on my position size, maybe $10. I've already won $10 just by taking this trade. I'm like, ooh, that's great. I'm like so smart. I'm already up, and the price hasn't even moved in my direction. Be very careful. People on Phemex know what they're doing. I don't know what it is. Maybe it's just a bunch of really good traders. But look out for the funding fee. If you're against the trend, reconsider. And the only time I've won trades against the trend is on quick scalps, where I'm like, okay, I'm in and out. Let's say, for instance, in this move right here, let's go back to TradingView. Zoom in. Okay, let's say on TradingView right here, I'm going to take my profit, my few $100 up here, okay? And then I decided, I'm really confident, for some reason, overly confident and reckless. That's reckless, Even if you're really confident, one thing I learned, no matter how confident you are, you want to practice good risk management. If there's 1% chance you're wrong, then was it worth it? Was it worth it to go against the trend? Was it worth it to trade against a freaking massively bullish impulse or massively bearish impulse, right? Whatever. Anyway, let's say I was reckless, I had no good risk management. I wait for my B wave to come up here, I take profit. I'm like, I'm greedy. Not only do I want to take profit here and then get back long here, but I'm also going to short this, right? I get into this short, they're going to pay me to short because everybody and their mother recognizes, at least on Phemex, recognizes that the trend is bullish and we're going to break out at any moment now. So they're going to pay me to do that. Once I put in the trade, I don't even have to put in the trade. I could just go and see right here, the funding. If it's positive, that means they're going to pay me to short. Okay, does that make sense? Positive means everybody's long. Negative means everybody's shorting. So if I'm against the trend, they're going to pay me to do that just to balance out the mark price. If I see positive, once I see that funding positive right here, my realized P&L, once it's positive, once I get in the trade, I'm like, oh shit, what I do? Like, what's everybody know that I don't know? And so that's a trick, right? That's kind of a good indicator as to what everybody else is doing. Maybe you're like reading it wrong or something like that, because on Phemex, let me tell you, like, chances are you're not the smartest guy in the room or smartest girl in the room. It's not that you know something that nobody else knows. So just reconsider, please. If you're getting paid to make the move, reconsider. That's my I'm on 3, right? That's my 3rd tip. Okay. And what's my 4th tip? Yes. Wait. Yes. The 4th tip is looking over on the other kids' homework, or looking over on the other kids' tests. Cheating, pretty much. It's not cheating, but just whatever. Let's have fun. Let's say it's cheating. Okay. Let's say I'm looking at Bitcoin, and this happens quite often, and I'm like, what the hell is going on? I don't really know. And sometimes you just looks like a bunch of stuff, right? I look at charts maybe 15 hours a day. I'm not kidding, and I know a lot of you do too, because it's it's one of those things, once you get into this business or this activity, business, whatever it is for you, you get into it, and it's not uncommon for people to get really passionate about it, right? And sometimes you're just constantly looking. So a lot of times I could just look and see and, make sense of what's going on. But sometimes it's just too many question marks, and I come away saying, I don't know. And that's a beautiful thing. Not knowing is like one of the best things I think you can say, because that shows that you don't have any presuppositions. You're not a prisoner to any assumption. That's good risk management. To always know and always be so sure can be risky, right? No matter how good you are. So you always want that, I don't know, there's a possibility, there's a chance that this cannot work. And because there's a chance, you put that stop in, you're careful, right? You practice good risk management. Anyway, one thing I do is, if I don't know, I look on the other kid's test. For some reason, and I don't know why, BNB, unlike Litecoin, unlike Ethereum's kind of funky. For some reason, Ethereum does its own thing. It has the chart is weird. It's like, it's kind of doing what Bitcoin's doing, but like in its own weird way. It's Ethereum's chart to me, it's like a goth, like a glow stick, like dyed hair. Nothing wrong with this. It's just strange. It's weird. It's different, right? It's got like a nose piercing. Maybe I'm like synesthetic. I don't know. My son's autistic. Maybe I'm autistic too. But I'm seeing Ethereum as being like the weird kid. Very smart, very clever, very talented. But they wear like the JNCO jeans and like big chains, and Ethereum's weird, okay? And you can kind of tell sometimes what Bitcoin's doing by what Ethereum's doing, but it's not as easy to look at that chart. Litecoin is like the kid who eats glue. Litecoin is like the really, like, how are you still in school kid, right? Litecoin, I don't know if you're gonna make it type kid. That chart always looks like it's just about to die. So sometimes it's like I can kind of see what Bitcoin might be wanting to do by looking at Litecoin and Ethereum. And why do you look at Litecoin and Ethereum? Once again, large market dominance. They have comprise a percentage of the monies traded in cryptocurrency. But you know what else does? BNB. And you know what's cool about BNB? BNB is the model kid. Like brushes and flosses every night. Says please and thank you. BNB eats their vegetables. BNB irons their pants and is never late for school. This chart is immaculate. It's like if somebody were to draw patterns out by hand, what it would look. I mean, look at it. Do you guys see what I'm talking about? Look at BNB. It's picture perfect. It's so clean. I don't know why. I don't know what fundamentals go into BNB. Maybe it's their burn mechanism, because I know they burn a lot of tokens regularly. I don't know. But BNB, for me, is my cheat code. If I have any doubt as to what Bitcoin's doing, because the pattern's a little messy, a little skewed, whatever, I look at BNB. Also a top 10 coin, and I get my answers. And they're usually like the easiest answers. So like, you guys may think I'm a genius. I'm not. It's BNB. BNB is so easy to read. I mean, look at this shit. This is the clearest 5-wave structure you'll ever see. 1, 2, 3, 4, 5. Anybody can count that. 3 waves down. 1, 2, 3. That's 2 waves. And then you count 5 waves once again. 1, 2, 3, 4, 5. Very clear. So Colby, for instance, you asked, hey, how do you know we're... Sometimes I don't know, right? And I start with I don't know, and then I'm like, what's BNB doing? I copy off BNB. Be careful. It's not always one-to-one. But by and large, they're in lockstep, okay? Top 10 coins are in lockstep. So BNB here is clearly showing me. Let's go on a smaller time frame. And yeah, if you guys are appreciating these little tips and tricks that I use, then definitely like the stream. And subscribe if you're not already subscribed. BNB is showing me that it's put in its wave 4 correction. Do you see that? Like, if I had any doubts as to what's going on, I mean, BNB is just so model. Look at this. Hey, Dean, we're done. Look at this candle. This capitulation candle. This is the end of the trend. And this is where wave A starts, okay? Wave B goes, and then wave C. That's BNB. And then zooming in, BNB also tells me that, just like we said in Bitcoin, whoops, just like we said in Bitcoin, we've completed the 3 waves, right? Initial breakup structure A, 3 waves in B, and then our ending diagonal wave C. Okay, and that ends right here. Then you have an initial break of our C wave goes like this, okay? And then you have a wave A, initial break of structure, a wave B, okay? 3 waves in B. And then you have a picture perfect 1, 2, 3, 4, 5. I mean, how picture perfect is that? Look at that. That's your initial wave out, okay? And then you have a wave 2, okay? So you have A, B, C, okay? I mean, look at that. I mean, look at BNB. So now you need a reversal. And you're putting in a reversal in BNB, okay? So let's zoom in real quick and see. You're basically where we were yesterday, at the bottom of wave 2, and you're putting in a reversal. Here you have your wave A, your 3 waves in B, right? You're basically completing your B wave at the top there, and then you're going to have your wave C. And look, once again, volume doesn't lie to us. What's volume doing? As price is rising, volume is going down. meaning this is likely a B wave that's not supported by volume, meaning it's going to go up only to come back down in a wave C, and then we're going to head out for our third wave. So those are my tips and tricks. That's what I'm seeing. That's how I use, like, if I come up with more, I'm going to tell you guys. You're not my competition, and even if you are, I don't care to tell people, because it's all about execution, right? To put all of this together, you have to put in the work, and if you put in the work and you're able to use this profitably, you deserve it. It's not because I told you. Like, I could tell you all the tips and tricks, and you can still lose every single last trade. As you all know, that trade, everything has to click, you know? Your risk management, your psychology, your confidence, your trading setup, you know, what leverage you're using, what coins you're trading, what patterns you're seeing, when you get in the trade, you know, when you get out, all that stuff, right? So have at it. So yeah, that's pretty much it. Just like we were in our B wave right here, going up for what I like to call easy money. These B waves, not every B wave. A lot of B waves are not easy money, okay? B waves are, ask Steve. Steve will tell you B waves are very tricky and nasty because they just go up and they do what they want to do when they want to do it, how they want to do it, right? But yeah, B waves are easy money. They go up and then they come back down. So I'm waiting for 3 waves. I see now 1. I'm gonna wait for a second one. I'm gonna wait for a third one. Take my profit. Wait. Get back into my trend. Ladder in. Right? How do you ladder into your positions? Right? That's also kind of like a pro move. Not getting in all at once, but putting in little by little. Seeing how you can do that. And then I'm waiting for my big breakout. And then I'm gonna practice discipline. Right? Good discipline. By not touching my trade. I'm letting it play and mature and, you know, take my profit at the end. So that's pretty much it. Let's see. Let's go back to... Okay, let's go on a even smaller time frame. Okay. Yeah, we all know that B waves only have to retrace to the 786, but for some reason I thought it's going to give us a higher high, okay? A lot of times the B wave ends at the 886. But once again, let's see. Did we put 3 waves in? Sometimes it's tricky. I got tricked by this the other day. Sometimes the first 2 waves are all the way down here at the base. Yeah. Let's see. For this to go this high, I don't know if it's an A wave, right? This might be it. This might be it. I'm going to put my take profit at the 886 of this A wave. I'm going to wait for the B wave of the pivot down and take my profit there. And then get back in. Yeah, those are literally all my tricks. Like, you know what I mean? I'm not protective about this stuff at all for the reasons I stated. Like, you guys, you know, I want everybody to do well, and everybody can do well. Obviously, it's a zero-sum game. Trading is a zero-sum game. If you win, somebody has to lose. But, you know, there's a lot of people that are just going to lose anyway, and they're not really taking trading seriously. But for people that take trading seriously, you know, I want for them to win, and you know, there's enough for all of us that take it seriously, I think. All right, Dalton, hey, what currency has a movement other than Bitcoin? The crypto has a different movement than Bitcoin. So Dalton, basically, your question is a good one. Let me give you an example. It's not that it's other than. It's just they're in different phases. Okay? It's still... It's like... think of Bitcoin as the sun, right? It has gravitational pull. It basically, Bitcoin is the mover of all the celestial bodies in the Milky Way, okay? The sun is the mover of the celestial bodies in the Milky Way by way of its gravitational pull. So you can't have a planet just decide to, although planets have their own gravity, you can't just have a planet just go on its own and, go around and round and do whatever the hell it wants. No. These planets are going to follow the gravitational pull of the sun. So, does Bitcoin control the movement of most of these assets? Now, does that mean everything turns at the same degree, at the same speed, and is at the same distance from the sun? No. Some planets are closer in. Some planets are further out. Some planets have a wobble, like the precession, right? Like the Earth has a 23.8 degree wobble, or its tilt on its axis, right? So all that has to be taken into account. Does that make sense? So you're going to have similarities, right? And everything's going to kind of turn around and revolve around Bitcoin, but it's going to look a little different. Does that make sense? Not everything's going to be in lockstep 100%, right? And especially not the small, especially not those coins that are, did I miss my take profit? I'm going to be patient. I think we still gotta, especially not those coins that have small market cap, right? And they're more volatile. Does that make sense? I hope that makes sense. So what's going on? Let's go on to go on the really small time frames, you have to get like the highest membership or whatever for TradingView. So I'm on the minute time frame. You won't be able to go on the minute time frame unless you've got like the pro membership. So what I'm seeing here is okay, I think we have one more wave up. Do you see that? Do you see that? Because we just went down, but my volume, even on the minute time frame, shows me that there's one more wave up. Do you see that? So I'm likely going to get filled here. And I'm likely to get filled right where I want it to. Right above here. So, yeah. Using volume, I use it all the time. All time frames. I use it on the monthly time frame. I use it on the weekly time frame. I'm just going to give you an example really quickly. Let's just go on the monthly time frame and sort of underline this idea that Bitcoin's not looking good on a large... Okay, let's first change to monthly. Let's auto. Okay. Like Bitcoin's not looking good on large time frames. Okay. And the analysis is not complex whatsoever. Like not at all. Okay. And there's a lot of confusion. I don't know anybody in Elliott Wave on online doing Elliott Wave analysis that has the same count. Maybe there are others, but a lot of people are seeing what we're in now as a correction to go to another wave. And I'm like, just look at any indicator. Look at the volume. Look at the volume, right? Volume doesn't lie. Look at where you got your spike. Look at what wave you're in, right? Boom. Volume doesn't lie. Wave 3 is typically the most impulsive. That's volume tells you that right there. And then once you get into the 5th wave, you have a capitulation candle. Right? Volume doesn't lie. And then once you get into correction, it's all downhill from there, right? This is where I think we're in correction. Price going up, volume straight up down, okay? So that's what I'm seeing. Volume doesn't lie. Even on the minute time frame, a monthly time frame, volume doesn't lie. It's a beautiful indicator. Let's go back into our degen minute chart and see. Putting in this B wave. So yeah, you can see beautiful things. I love the minute chart because if you really want to study price action, you can do it so well on very small time frames because price action is price action. It doesn't matter what time frame. So you can see things in great detail. Sometimes if you have the right sort of data. For my TradingView package, I pay for like it gives me extra data, so I'm able to see all these little details, right? If you don't, you may not be able to see as many candles as cleanly, right? So you see your pivots very clearly too. Do you see that pivot right there? You see 1, 2, 3 waves there. You see 1, 2, and then your impulse. 2, 3, 4. This is clearly wave 4. Wave 5 is going to come up here, yeah? So we can even move this because wave 5 looks like it's coming up here. We can get even more precise. Let's try to, but if I go on the 1 minute chart on Phemex, it's not going to give me as good information, but it's okay. It's decent. It's gotten better. It used to be really bad. But wave 5 usually comes to the 1618 of wave 4. Do you see this triangle forming? Wave 4. Volume is showing you that it's consolidating, right? Volume's coming down. Price is coming down. Volume's coming down. It's consolidation. This seems like a wave 4 to me. Could be wrong, but it seems like a wave 4. So wave 5 usually targets the inverse 1618 of wave 4. That's why I put my target there. Maybe I'm getting greedy, but maybe I'm right. So let's see. XNO. All right, let's look at XNO, Dalton. Give me 1 second. You know what I should do? Let's see. No, I'll just leave it. Let me take profit on this little scalp first, and then I'm going to look at XNO, Dalton. And if anybody else wants me to look at anything, just let me know. Put it in the chat right now, and then I'll just go through them boom, boom, boom. After I take my profit. See, Niha, we wait. Traders wait. We wait for everything. We wait to take profits. We wait to enter. We wait. We're just some of the most patient people in the world. Traders. Okay, I'm looking at volume. All right, we're coming down, but I'm looking at the volume, and I don't see a spike. I don't see a spike. So I'm waiting. I don't see a spike. So I'm waiting for that next move up. For me, this is still part of that wave 4 correction. Do you see how volume doesn't lie? If volume were to corroborate that move down, then, we wouldn't be turning back around. But do you see that? I mean, you can't make this stuff up. Volume is so powerful. If you get used to using volume, it'll help you with your accuracy. It'll help you with so many things. All right. Come on. Anyway, let's start looking at XNO, and we can stop babysitting this. It's not that important anyway. It's just a small scalp. EXRD. Sure. Oh, hey, Joe. Zhao. I don't know if I remember how to say it. Long time no see. So what we looking at? XNO. That sounds like an energy drink. XNO. XNO. And EXRD. That sounds like a pharmaceutical. EXRD. XNO. Okay, so first things first, when I'm looking at something I don't know anything about, I haven't looked at, sorry, just checking on my trade, I see volume is still saying that we're in some kind of complex correction, right? Hanging out, boom, boom, boom. I'm going to wait for that final push up. Come on. Oh. Does that make my 1618 even further? Yes, it does. I'm going to move it up a little bit. Right? Do you guys know the sound it makes when you take profit or when you get stopped out? That sound literally traumatized me for the first year I was trading because I'd always get stopped out. So the sound, I could, like, if people played it in their videos, I'd like jump. Like I had I'm not even playing. Like I had PTSD. It didn't like sound like a normal sound, or like didn't make me jump and feel anxiety only after I started winning more. You know what I mean? Like shit's traumatic. If you guys know what I'm talking about, leave a comment in the chat. If you don't know, you don't know. Whatever, it's fine. XNO. Okay, I don't. So this is a relatively new kind of asset. I don't have that much information. Very little information, actually. And let's see if I can't get a chart that has more information, because there's very little context. All right, let's go into the TradingView chart. Let's get rid of this one. Same stuff. I don't have that much information. So these are complicated because it's just the context is sound off. Is the sound okay? Zhao. So because I don't have the context, it's hard to say, okay? But given limited context and just using this volume indicator, here's what I'm seeing on the daily. Okay. Price is coming down. The volume is confirming the move. Okay. So this is telling me that this is some sort of impulse to the downside. All right. On the daily. This candle, to me, seems like the end of a trend. This is a capitulation candle, basically the end of a trend, okay? So from here on out, I'm looking for a break of structure, right? And what's a break of structure? If you take a trend line like this, I want to literally break it just like we see this candle did, right? I want to break it and maybe make this high. Maybe either make a higher high or at least make this high, okay? Once I do that, and then I put in some sort of three-wave structure following that move, only then would I look to long it. If I don't get that, if I don't get something like this right here, I'm not longing it. Okay, especially with this little information, right? I'm using volume, doing my best, but there's very little information. And for me, when there's so little data on an asset, I don't trade it. There's no point. There's like thousands of other assets with full on charts to give me an edge, and where I can apply my skills as a chartist to do a proper read and, have a really good chance at winning a trade. So if I have so little information and it's a guessing game, I'll do my best, but I'd rather, trade something that I have more information on. So I hope that helps. SL sounds? What are SL? EXRD. Okay, let's see. EXRD. Let's check in with my scalp. Ooh, yeah. See that? Volume never lies. We're still in an uptrend. You see the green candles are big. The red candles are small. We're just coming out of it, right? Do you see how I just used volume there? I used two things. I used volume as an indicator. I didn't waste my time trying to count all of this and say, oh, we're in a wave 4, but I'm like, whatever this is, it seems like a consolidation, likely wave 4 consolidation, because we're close to the top of the range, of this trading range, right? So it's likely wave 4, likely a complex correction, because you tend to get wave 4 complex corrections. But I literally just looked at volume on a low time frame to tell me that we were still going up even when the price was going down, right? And then I did I don't know if this is going to hit, but wave 5 tends to be the inverse 1618 of wave 4. So if this was indeed wave 4, wave 5 should come to here. Now, wave 5 sometimes stops at the 1, 2, 3, 6. So just have to keep an eye on it. But by and large, more often than not, it does hit the 1618. So I do expect a wick up there. Yeah, stop loss sounds. Oh my god. Oh yeah. Stop loss sounds. Yeah. Oh my god. Isn't it traumatic? Like, oh, fuck. Like, and like, the worst is like, you put in your trade and you're going to sleep. You're like, all right, hopefully I wake up in the morning and win this trade. And right before you close your eyes, you hear. And it's like, oh no, like, how much money did I lose? And I'm like, I'm tired. I don't want to get back in another trade. And like, what did I get wrong? Like, oh my god. Only traders understand this, the suffering we go through. This is real suffering. To really like learn this, oh my god. So much sacrifice, so much suffering. But it's all worth it, I think. All right. Ooh, this is a full chart. Or at least much more full. Kind of same as EXRD. You see this downtrend, and in this downtrend, actually different than EXRD. This downtrend to me is not supported by volume. This downtrend is consolidative, right? Because volume, the larger trend is up. Do you see that? Volume, like everybody's in on this 5-wave move to the upside, and then price is going down. I expect right here 2, 3, 4. I expect, so I just counted 5 waves, may be right, may be wrong, but once again, not only having to rely on your wave count, which sometimes, can be off, just put a simple trend line and wait for an initial break of structure, which is an A wave, right? And an A wave would be something that comes out here and meets your wave 4 of the previous trend, right? So it comes out, it breaks this trend, right? Then wait for your flat correction retest, which would be your B wave, and then buy the C wave. That's what I would do. That's what I'm seeing. I'm seeing that the next move on this EXRD is up only because of this. I don't have too much context, but whatever this is, it's consolidation for a move up. That's what volume's telling me. Volume's never lied to me. Okay, I'm starting to get some volume on my down trend. Okay, what I'm gonna do is so basically this is an A wave, maybe, or this is a continuation of wave 4, perhaps. I'm gonna stand pat, because it can be a, but we're getting volume here. I want to say this. Let's see. We didn't even hit the 1, 2, 3, 6. Or this was wave A. This is wave B. I don't know what this is, right? So I'm just guessing. Maybe this is 1, 2, 3, 4, 5. This was 5. This was the A wave. This is 1, 2, 3 of the B wave. I'm going to put my take profit up here. I'm anticipating coming at least to this point right there. Okay, and then let's see. Yeah, of course. It is too late for a revenge trade. yeah, right? You're trying to go to sleep and you're like, I really shouldn't be doing this, but I don't want to lose. And the best feeling, one of the best feelings in the world, is waking up to a take profit, right? It's something that there's nothing better, right? You wake up and you got profits. You got money in your sleep. Yeah, R-weave. Yeah, AR, R-weave, for sure. Let's look at R-weave. Come on. I don't know what this is, but let's hit my profit. I think this is a B wave. This is 1, 2, 3. I'm looking for that. Okay, let's look at R-weave. 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 Rand Neuner's favorite asset. Okay, so similar to, and this is kind of back to Dalton's question or premise. Most of these things are gonna do what Bitcoin does. Bitcoin's gonna pump, they're gonna pump, right? So I think that's also one thing that you can look at. But we're going down, volume is going down. That means it's not supported by volume. This is consolidation. This was kind of like, this is my A wave, my B wave. I'm going long. Definitely going long R-weave right here. I'm looking for, I don't know what kind of move, but in terms of like the distance, target. Let's see. Hold up 1 second. Okay, we're still chilling there. I'd say, okay, just knowing what I know from what Bitcoin's doing, I'd say this is my A wave, right? This is my B wave, and this is, R-weave has put in its impulse to the downside. I see 5, 3, 5, 3, 5. So I see we did our A wave, our B wave, and our C wave. I would say Arweave comes no higher than 46. I would say 46. I would take profit close to between 40 and 46 because I'm seeing Arweave nuke after this. That's what I'm seeing on Arweave. Yeah, I mean it's pretty much I think where Bitcoin is at. This is the TradingView chart, so it should be pretty complete. All right, I think this is the final move up here. This is our final move up. Let's hear that sound. That sound, but in a good context. All right, let's reassociate the take profit sound. Anyway, is there anything else anybody wants to see? Pretty much everything. It doesn't matter where it's at. If Bitcoin is nuking, if Bitcoin is tanking, I wouldn't expect anything to go counter to Bitcoin. Bitcoin's a market maker. So if I'm planning to take profit in Bitcoin around 50K, 50, 52, 55, whatever, and then after that, I'm expecting a huge downturn, right? A huge downtrend. I wouldn't spot buy, I wouldn't spot long or leverage long anything, to be honest. After that, it's unwise. Do you know what I mean? That's just my 2 cents. Come on, one more. You want to hit that 1, 2, 3, 6. Come on. One more. If it doesn't go up, I'm just going to close it out. I think it's going to go up. It's going to go up. It's going to wick. Usually wicks pretty hard every time I think it's not going to come up. Let's go. Come on. And guys, don't forget to pay yourselves, right? Something I didn't do when I first started trading is I would be in a rush to grow my account. Meaning, I was like, okay, I know I'm not starting with much. I started with very, very little, right? This is a small trading account as it is, but I even started with smaller, right? And I would trade just a few bucks here and there, and that was great because I made a lot of mistakes and lost a lot of money, but it wasn't a lot of money in the scheme of things, right? But what I'm trying to say is, what am I trying to say? All right. Yeah, see, there you go. Wicked up. Okay, what I'm trying to say is, what the hell am I trying to say? What am I trying to say? Trading. Oh, pay yourself. Pay yourselves, right? I didn't pay myself because I was in such a rush. And this goes back to what our friend Niha said. You know, when this and when that, you want to be really patient. You want to be patient about growing your account. You want to be patient about making money as a trader. One of the ways I lost a lot of money as a trader was trying to rush my account into a 5-figure account, okay? Like, I hit 5 figures a few times, but then I would lose big because, one, I didn't know how to handle size. I wasn't really ready for my account. I wasn't ready to take $700 losses and think, oh, that's fine, that's just, part of doing business, right? I wasn't ready to do that because for me, $700 was a lot of money, right? I wasn't ready to see my account fluctuate by so much, right? I just wasn't mentally prepared, and I didn't feel fulfilled. I felt like I was losing, and I wasn't getting much from it other than these lessons that I filled my trading journal with. So one of the things I think is important that I didn't do, but that you should do, is pay yourself. And so one of my rules now is each win, for instance, like I think I just took like $170 or $80 profit, right? 3/4 of that goes to either my Celsius or my bank account. Like, it's just money that I'm going to spend however I want, right? Maybe I pay bills with it. Maybe I just piss it away, give it to my wife. It doesn't matter, right? And then 1/4 of that goes to growing my trading account. That does two things. One, it shows it even if I take a loss later on, in the grand scheme of things, in the aggregate, I'm not losing because my wins are I'm taking profits in the truest sense. I'm locking in profits. A lot of beginning traders will take all those profits, roll it back into the trading account, take a big loss, and have nothing to show for it, right? It's okay to lose money, but then mentally, psychologically, it's hard on you when you're not realizing any gains from your trading exploits. So that's another thing I really benefited from, my 3/4 rule, and I've had that rule for a bit, and it's helped a lot, right? 3/4 of every win goes straight into my pocket. 1/4 goes to growing my account. That's it. So, yeah, so that's pretty much it for me. Like I said, we're gonna maybe let's stay on and see this breakout together. Maybe I'll make the entry with you guys on stream. Because this is going to be an impulse. So let's go on the smaller time frames. So, I mean, it's playing out like I said it would, right? But this is just a simple ABC. Maybe I won't stay on stream for this because it may take some time. But this is a simple A, B, C. Flat correction, okay? After this five move leading diagonal, right? So I think the move is you get in here, you find a stop somewhere down here, whatever. Maybe you use your fib retracement tool, the top of this move, right? Basically under the 618, I like to do it 50% or below, right? Because the 50% level is important to me. And once again, you long it and leave it, right? That's what I'm gonna do. So I hope this was helpful. I hope this was useful. I mean, I hope you guys can get in on this if you're not in on it yet. Not financial advice, but I'm definitely getting in on it. And this is one. So in trading, sometimes you don't take, well, I don't take every trade with the same amount of risk, okay? Not every trade is the same. For me, this is not scalping. This is a swing. This is everything in the context of it is very high probability for me, okay? So I'm going in on this. I'm going in on this. In. I'm going to use as high leverage as I possibly can to stay safe. And I'm going to put a tight stop. What am I doing? I'm going as high leverage as I possibly can. I'm going to put a tight stop, like I said, using my fibs at the 50% level of the 618 and 786. Whoops. And I'm going to let it ride. If I get stopped out, I get stopped out. But I live with the loss. But if I don't, I make this is a life-changing trade, or like, a career-defining trade. And this is what I've learned. I can take 13, 14, 15 trades, win them all, and it doesn't really change much, right? I'm paying my bills or whatever, but one great trade and it puts me in another level, right? A trade like this that we're seeing here, it doesn't come every day. These are the trades that take you to your next level, maybe take you from a 5-figure guy to a 6-figure guy. Do you see what I mean? 6-figure to 7-figure, or something like that, right? So good luck. I wish you guys well. Use good risk management, and hope this was helpful. Hope this was useful. Like the stream if you haven't yet. Share, subscribe, do all that good stuff, and I will see you guys tomorrow. Bye.